moments away from the opening bell on Wall Street. Stocks about to drop. Looks like a lot. There are fears this morning, new fears about a possible recession. Christina Leshy is with me. To just start out with the warning signal here, and I know it sounds, I mean, the futures are off almost 400 points. I know it sounds wonky, but this morning the 10-year yield on U.S. Treasuries, secure investment, fell below the yield on 2-year bonds. Hasn't happened since 2007, which was a precursor to the last recession.
So we're really going to geek out this morning.
Of course.
What that is called is an inverted yield curve, and when shorter-term rates are higher than longer-term rates. That's not the way it's supposed to work, and usually when you have an inverted yield curve, that is preceded by a recession. Usually. We are in an abnormal environment, so no one really knows where we're going to go from here, but here's the thing. Warning signs of a recession are flashing everywhere. And just to take you through what happened yesterday, investors were really optimistic and perhaps saw the delay in tariffs as a sign that Trump wanted to get a deal done with China before the election. This morning, I called it. They're waking up and realizing maybe not. Maybe he's going to drag this through the election. And by the way, there is still $100 billion worth of goods that are going to face the tariffs. So investors are sobering up this morning and realizing the risks ahead for sure.
Okay, stay with us. Rana Fruhar is also with me now, associate editor for the Financial Times and also our global economics analyst. So Rana, I mean, this has been your view for a long time. I mean, you have been concerned that this is exactly what is coming. What do you see? I mean, the market's off almost 400. We've seen this before. I'm interested to see what happened. Well, we're below 4 now.
No, I think that we're going to be in this place where we start to see plunges followed by short relief rallies. Part of that's driven by the fact there's so much computerized trading in the market right now. I mean, you know, when the market falls, algorithmic traders come in and buy the dip. So you get this sort of false high.
You called it a head fake yesterday.
It's a head fake. Yeah, no, it is a head fake because if you look at the fundamental story, there are two things that the market's worried about. One is that we're not going to get a U.S.-China trade deal. I don't think we are going to get a trade deal. I mean, you see Trump coming in and...
You mean before 2020?
Before 2020, period. I mean, maybe ever. I think that the problems here are really existential. The U.S. is saying, the Chinese, we want you to change your entire system of government. You know, it's not just about tariffs on this or that product. You're going to see the president, particularly in the run-up to 2020, trying to smooth things over, trying to keep the market up. But I think that the market is not buying this anymore. I think that, you know, we're going to see a lot of jitters, but it's going to be a downward trend.
Patience is definitely.
I hear you on that. I also do see the economic numbers out of China. Now, they don't have the political impetus to get this done. Xi Jinping isn't up for election in 2020 like Trump. But there is some pain, right, relative to what they've experienced.
Retail sales were below expectations today.
Industrial production is way down, too.
Industrial production is way down. But let's not forget, our manufacturing sector is hurting, too. Like, our exports are down. There's real... The promises that Trump has made to the workers in the manufacturing sector and to the farmers and the agricultural community, he's not delivering on them. Something needs to happen before the election.
Let me just jump in here and switch gears a little bit because we don't have all the time in the world and this matters a lot because this is, yes, we all look at the market and there's an urgency when you see the market down so much, but let's talk about the long-term big issue driving this as well, I think, and that's the debt and deficit issue. I mean, we learned this week that we're facing $1 trillion deficit by the end of the fiscal year. Let me remind you what President Trump said verbatim to the Washington Post, to Bob Woodward, to the Washington Post in 2016, quote, "We've got to get rid of the $19 trillion debt. How long would that take? I think I could do it fairly quickly because of the fact of the numbers. But what's fairly quickly? Well, I would say over a period of 8 years. Rana, the debt was $19 trillion then, it is $22 trillion now. The president has not only not gotten rid of it, he has exacerbated, he and Congress have exacerbated the crisis.
And no, this gets back to the Trump tax cuts. We were all told, oh, we're going to bring home all this money, it's going to get invested on Main Street, we're going to create new jobs. Guess what happened? A lot of money came back. It all went into corporations buying back their own stock, which artificially pushes up the market, but doesn't really change the real story, doesn't create jobs. And this goes to a really big point, which is that we are tapped out on easy money, monetary policy, the Fed being able to, despite their best wishes. I mean, I love the Fed trying to keep the economy up, but guess what? They can only move money around. They can't actually create real growth.
Sure, there's also those, the MMT, and those who believe that it doesn't, the modern monetary theory that it doesn't matter how much
It
debt
doesn't
you have,
matter.
and you can print money and you can spend, and that's
This
a
is what we were
minority.
talking about in the.
It's a minority group.
It's ironic that Trump and the Republicans are actually
Yes.
sort of moving to the left wing of the Democrat Party on this issue. The monetary theory that you're talking about, which is spend, spend, spend until you literally cannot spend any more, is an ideal and a theory that the left wing of the Democratic
Right.
Party has embraced, and now you see the political conservatives embracing that
Well,
policy
it's
in a way as well.
It's interesting. I mean, it's the same thing, which is that you can paper over all political problems with easy money. I mean, the left will say, well, hey, we gave corporations all this money for the last 10 years. Why should we not use it to do a Green New Deal or educational reform
Or middle class
tax cuts? Fair enough. But again, printing money doesn't paper. It's a saccharine sort of sugar high that doesn't fix the real problem, which is that we need a new growth story in this country.
We need a new, is that the title of your next book, Ronna? The New Growth Story
No,
in this
my
country?
next book is Don't Be Evil. It's about big tech, but maybe
There
I'll
you
make it
go.
for book
Nice.
Look forward to it. Thank you both very, very much. Christine, you'll be busy today watching the Dow off more than 400 points right now. Okay, we're going to talk about the economy.